Here's the story of a bearish trader who was selling into every single bounce. All his orders hit the bid, such a sucker. Sometimes you buy the dip. It's the story of a bullish trader who was buying each down tick he saw. He averaged down and rarely stopped out on the edge of blowing up. Until one day they subscribed to Routine Trader and realized they can do both buy and sell. That there are two sides to Mr. Market, and beating him both ways is pretty swell. Yeah, pretty swell, so very swell. Beating Mr. Market both ways is pretty swell.
Cheers to another beautiful trading day, retail trading team. I'm Mastro, and this is your routine briefing. So we are going to jump right in today and look at really what we're looking at for tomorrow as we kind of consolidate, prepare for the ostensible big news that is tomorrow's CPI. So I'm going to go ahead and share charts, and we're going to have a chat, as they say. Okay, so the story of the day, and has really been the story, I think, since coming back from July 4th, is consolidation leading up to tomorrow's CPI. So in terms of today's action, if you want to look at ES first, which is what I'm doing, you can see we're just kind of in the middling around these various structural components. That solid red line above is kind of our primary resistance, and that cyan blue below is what I guess you would call our primary support. So hanging out near the top of that range and just kind of meandering, awaiting tomorrow's news. So we'll see if tomorrow leads to some sort of breakout. Yeah, we could very likely consolidate for a while. So in terms of my trading today, I was involved in our friend NQ here. So I'm going to just kind of show you what I did, and we'll talk about that a little bit. So, wow, that looks really ugly, doesn't it? So I add the winners, as anybody looks at my mechanics knows, and stand by. Let me mute this call. It's actually my mom, so let me tell her I'll call right back. Stand by. Okay, so anyways, back to the tape. I'm going to get rid of this just because it's super ugly. I'll have to figure out a better way to do that. We did a little while back, a few briefings ago, just kind of that live run through. I think I'll probably favor that going forward. But today, again, I don't really think there's too much to talk about. So my trading, I ended the day down a whopping $95, and really it should not have been a red day. So what I was doing here is let's get rid of this. Let's get rid of that trend line there. So what I was doing, I was buying that dip. I was looking for a reclaim of this white level here. That's one of my key levels for NQ, and I was just buying it too soon. So one of my mechanics, if we look at that document, which you can find in the description of this video, is right here. Right here. In fact, I'm going to bold it because clearly I need to remember this. Don't fade the 50-minute candle color. I was trying to get fancy, trying to get involved even when the candle was still red. And if I just waited, there was plenty of winnings to be had when this candle started to turn green. So after could have gotten involved on the short side, yet if I did have that bullish bias, which I did, I should have waited for this candle to start turning green before getting involved. So it was a slightly red day, should have been green. A good lesson to pay attention to. All the lovely mechanics, again, you can find in the description of this video. So that's what happened with me today, and we will see what happens the rest of the day. Again, I expect a lot of kind of consolidation. You can see this profile is kind of that D shape, balanced, holding pattern, waiting for tomorrow. So in terms of the main levels that we're looking at on ES, I like to use ES for the structural levels. That is a little cleaner. Specifically, SPY is going to be the following, So we're going to start in this weekly chart and go from there. So the main levels in this weekly chart are that 431 to the downside and 444 to the upside. So a couple interesting things to note on this weekly chart here. First being you're seeing that bull flag consolidation very, very clear. You have this outside up candle 2 weeks ago. This is 2 weeks ago. You're seeing that bull flag form right below this trend line. So this is a dash trend line because it's just coming from the high, from the overall high. Yeah, we are currently above, or excuse me, we are currently below that October 13th trend line. So what we're looking at, and we want to see for the SPY, if you're a bull, is you want to see a pop above that 444 and start making new highs above this trend line. So we did have a nice little cleanup on the weekly chart. We came back and we tested that top of the value area there. Remember, I was talking about that for a couple weeks. I'm going to pull this chart over. We had a really excellent demonstration of setup 3. So we popped outside of value, tested it, and then we moved back out again. So still looking really bullish. We are still in a state of imbalance. As you can see, value hasn't moved up, and everything does favor the bulls, especially that flag pattern. And as so long as we remain, I think, above at least 437 for sure. And if we go back and retest that 431, I'm still going to be bullish on that initial retest. So that's what I see on the weekly chart there. And if we go to the daily, get a little more granular, again, you see we're in this holding pattern. We have a swing low yesterday, a swing high the day before, and another swing low before that. That's characteristic of these holding patterns, waiting to see what happens tomorrow. So the first sign of trouble, I think, for the bears is not necessarily even a break of that 444 level. Once we start to move above 442.50 and then above 443, breaking this 3-day swing high, I think we are going to be potentially off to the races. So again, watch for tomorrow. CPI is notoriously trappy, so the first move is not necessarily to be believed yet. Just kind of keep in mind those key levels, which you can see in this warm-up document as well. I keep those updated for you right there. And for those of you trading the Occam, I have converted this to excuse me, NQ to be a little more informative for that trading. So that's what we got going on the SPY. Just a couple other things I want to mention. You can see we're still above that 4 sigma final VWAP band there. And again, as I've said several times, we often do see a correction when we pop above those bands. Going back all the way here to 2011, you can see every time that we pop above it, we eventually do correct at some point. Even if the band does catch up, you do usually have some correction slightly below it. So be watching for that. Again, we could have several more weeks before that correction. That is a longer term indicator, we'll say. So just kind of be watching that. And that is going to be right near where that support is, right near 431. So again, be watching that 431 area for any potential pullback there. So besides that, volatility is relevant again, and the crowd goes wild. So lots going on in this volatility chart. We had that huge gap up a few days back, and we did create that gap, which we have yet to fill. We look like we were going to fill this morning, haven't quite filled it. So watching to fill that gap here. And we have a couple other gaps to fill as well, one to the upside here, and then one more to the downside, which we haven't quite filled down here. So it's gap sitting on volatility. So watching all these horizontals very closely, and you can just kind of see those levels there. I don't note them on the warp document yet. If you're interested in those volatility levels, you can pause this video. I'll just go over them real quick. About 1580 to 1600, 1620, 1660, 17, and 1740 are the most immediately important levels there. So that's what I'm looking at. We'll see what's going on the SPOOs. Again, just kind of getting that midday chop. I do stop at 11 a.m. A couple past few days, I've been trying to get a little greedy and giving up some profits trading outside that window. So I'm going to start listening to that as well. So again, mechanics exist for a reason. That's why you back test them, and whenever you deviate from them, it usually doesn't go in your favor. And then if it does go in your favor, you're just reinforcing a bad habit. So good lesson there. So watching those levels for tomorrow, you can find those in the warm-up document. I will do another video pre-market, but post CPI, so sometime between 9 and 9:30, just to get ready for that RTH session, and we will go from there. So that's all I have for you. Don't need to bloviate. Everything's clear. We're in a holding pattern that's even more clear, and we're really just awaiting that CPI for tomorrow. So I will follow up with a newsletter, which is going to package everything nicely, give my key points going into tomorrow, and then again, I'll send another one tomorrow for that kind of really immediate analysis after the CPI releases in the morning. So that will be in your inbox if you're a subscriber. If you're not, please go to retailtrading.com and you can go ahead and subscribe to that if you're interested in having this all in your inbox with key levels and key insights that I use for my personal trading journal every day. If you find those insights useful, if you found today's video helpful, I always appreciate that thumbs up to help with the YouTube algorithm. And I also appreciate any engagement in the chat here or on Twitter at Routine Trader, where you can find me hanging out sometimes. So I thank you for your attention. I wish you an excellent rest of your trading day and stay classy until tomorrow.